MicroStrategy just bought even more Bitcoin. Again, at this point, it's not even a headline anymore. It's a pattern. And every time they do it, people ask the same questions. Are they crazy? Or are they actually playing 4D chess? Let's break it down. So MicroStrategy, also currently known as Strategy, the business intelligence company most people had barely heard about 5 years ago, is now basically a Bitcoin holding company in disguise. They've accumulated almost 600,000 Bitcoin. That's 3% of the total supply. Michael Saylor has gone from software executive to full-time Bitcoin evangelist. And now they're using convertible debt, stock offerings and corporate cash to buy even more. But here's the thing, why would a public company go this deep into one asset, especially one as volatile as Bitcoin? Let's talk about the logic behind it, the risks and whether this is actually genius or a slow motion disaster. Now, this isn't financial advice. I'm not saying buy Bitcoin or follow Saylor. I'm just breaking down the strategy and sharing how I personally see it. First, the core idea behind MicroStrategy's move is this. Fiat currencies lose value over time, but Bitcoin with a fixed supply of 21 million is built to hold value and gain purchasing power in the long run. So if you believe that, then putting your company's cash or even leveraging your balance sheet to buy Bitcoin is basically a bet against inflation and a bet on digital scarcity. But they are not just borrowing with profits, they are borrowing money, issuing debt to buy more Bitcoin. That sounds risky, unless you understand the play. Here's how Saylor likes to see it. If I can borrow at a few percentage interest and Bitcoin goes up 50 to 100% over a few years, the spread between the growth and the cost of the debt makes it worth it. It's like taking out a mortgage at 3% to buy property that appreciates 20% a year. It's aggressive, but it's mathematically, it can work if it outperforms other assets. And so far it has. They started buying in 2020 when Bitcoin was under 10k. Even with the volatility, their average cost basis is still far below today's price. And their long-term view is that Bitcoin is still early. But let's be real, there are risks. Number one, if Bitcoin crashes and stays down, it could wreck their balance sheet, ruin investor confidence and trigger serious sell-offs. Number two, if interest rates rise or they can't raise capital efficiently, the whole borrow to buy model gets much tougher. And number three, reputation risk. They have tied the entire identity of the company on one asset class. If Bitcoin wins, they look brilliant. If Bitcoin fails, they go down as a case study in corporate recklessness. So, are they crazy or genius? Honestly, I personally think it's genius. I personally own some MSTR stock myself because I believe in the long-term potential of this strategy. It's bold, it's high conviction, and it's not for everyone. But if you believe Bitcoin is the future of value storage, then what they're doing makes a lot of sense. It's high risk and a high reward move, and they've leaned into a full commitment. Their stock has even outperformed Bitcoin and the S&P 500 at times because investors see it as leveraged Bitcoin exposure. The pressure is on the public companies to at least think about what their strategy is, because MicroStrategy is setting a precedent. So here is what I'm watching. How do you manage future debt? Do they ever sell BTC? How do they adapt if Bitcoin enters a multi-year bear market? For now, they're doubling down, and whether they end up remembered as reckless or revolutionary depends entirely where Bitcoin goes next. If this helped you understand what MicroStrategy really is doing, hit a subscribe. I post daily content on Bitcoin, macro trends, and what smart money is actually doing. And tell me in the comments, is Saylor crazy or does he know something that the rest of the other companies don't?